Yeah, hello guys, welcome to my YouTube channel called The Talk Tech. In today's video, I'm going to show you guys how you can trade on Binance futures with demo account so as to help you get more knowledge and insight when it comes to trading on Binance futures so as to make more profit. So guys, if you are new here, kindly subscribe to my YouTube channel, click on the notification bell so that you'll be notified anytime I post a new video. Like this video and also do not forget to share this video so as to reach more people to also benefit from this video. So without wasting my time, let me quickly take you to my phone to know the step-by-step processes that will help you to trade with Binance futures so as to help you get knowledge to make profit on your Binance trading. So let's get started. So when you open the Binance app, this is the Binance page. Then you go to the features as the arrow is pointing to the features. You click on features, and this is the features page. And at the top right corner, you see the three dot line horizontal as the arrow is pointing to. You click on that, and when you click on that, you see the down here you have the mock trading as the arrow is pointing to. You click on the mock trading. That is where you want to enter into the demo account, and you see start tour. You click on start tour. Then this will come. It says log in with Binance account. Then you press continue if you have an account on Binance. Okay. Then it will take you to the Binance futures demo page. The reason why here is demo page is because you can see here, you see back to life on the top right corner. I'm using the demo account to explain things to you. You can see I have available balance. Okay, that is 11,719 USDT. So this is the balance that I'm going to use to trade on the demo account. In our previous video, I have explained to you the USDM and the coin M. USDM, that is I want to use USDT to trade, okay, and the coin M, I want to use cryptocurrency such as Bitcoin to trade. So here I want to use USDM to trade. So with the USDM, I have to choose the futures contract, and the futures contract is BTC USDT perpetual. That is, I'm trading with USDT in accordance with the BTC, okay, perpetual. So here, that's the futures contract, and you know the isolated. I've explained it to you. You know the leverage, you know the buy, we know the sell already. So here, I'm going to use some of my available balance here to trade on this Binance futures demo account so as to know what this means. Okay, so here you can see the mark price is at 24,999 USDT. Okay, so here I want to enter. If I want to enter, I have the limit. Limit means I want to set the price at which I want to enter into the trading. Okay, so my limit is 24,993.5, but I want to enter into the market straight with this mark price. So I choose the market from here. I select market. So with the market, I automatically enters into the market. Okay, and here I enter the amount. With the amount that we enter, it goes in accordance with the leverage. So if I want to trade with 100,000 USDT, 100,000 USDT, you can see 100,000 USDT, the leverage is at 40%, and once I enter the amount here, the leverage is at 40%. Then here you can see my cost is 1,000 USDT. Okay, that is $1,000. Okay, my cost is $1,000 as you can see here. Then if you want to take profit, assuming at this mark price, you want to take profit, then your profit should be higher than the mark price, so that when the market hits this price, you get profit. And with the stop loss, you set it below the mark price. Okay, so with the stop loss, it should be less than the mark price, so that when the mark price reaches the level at which you are losing money, then automatically you stop the losses of the higher loss. Okay, so I want to take profit when the market hit 25,100 as the market is at this, and I want to stop loss when the market hits 20 24,000, 24,900. Okay, so this is the take profit and stop loss. Okay, then you place on the buy if you want to go with the buy, and you place on the sell if you want to go with what the sell. Place on the sell if you want to go with the sell. So here I want to buy, that's take what long. So when I take long, then automatically it will come to the position. You can see it says success. You can see the order has been placed and it is at the position. So when it's at the position, let me explain something to you here. The reason why here I have open orders is that I have set the market to take profit and stop loss. So here it says at the mark price of 24,900, I want to stop what loss. Okay, I want to stop loss. And at the mark price of 25,100, I want to take profit. Okay, as I set it here, that's why I have the open orders to be true. So let's see where the market is. So there you can see I am earning small. As you can see, with the entry price of 25,042, the mark price is moving. Okay, this is the mark price. The mark price is 25,050. Okay, so here if I want to close this market, then I go to the close position. So as you can see, I've made unrealized profit and loss here. That's I've made $16 profit, and here that's the ROE is the profit percentage. Okay, profit percentage. So if this one light red, it means I am making losses, but if it's light green, it means I'm making profit. So if I want to close this market, then I just go to close position, because I will say, okay, as I have reached this place, it's okay, I'm okay, I want to close this position, I don't want to trade again. Then I press on the close position. When I press on the close position, this will come. It will say estimated profit is 90, as it is going 89 points, this 91 point this. Then I press confirm to close my market. Okay, so you can see now at first my amount was 11,714 or so, but now it comes 11,728. So it means I've earned profit from it. Okay, and here let me explain one or two things here to you. I want to go into the market again. Okay, but here this time around I'm not going to set take profit or stop loss, so I'll just cancel it. I'll enter into the market straight. Then I set my amount accordance with my leverage. Okay, so here let's say I want it to go to 50%. Okay, 50%. So with the 50%, I'm going to incur a cost of 1,362 USDT. Okay, this time around, if I want to go to long, then I just enter long. If I want to go to sell, then I just place what sell. Okay, but here I want to go buy again, and let me just take my leverage there. Okay, so this is the amount I'm going to incur. That is 1,354 USDT. So here I can say, before you can just enter into the market by going for buy or long, you need to read the market. You need to read the chart. Okay, read the chart to know whether if you set it to buy, you are going to make profit, or if you set it to sell, you are going to make profit. Okay, so here there's one thing I want you to understand here. When it comes to futures trading, we have what they call chart pattern. So with the chart pattern, we use diagrams to determine whether at this level we are going to make profit or we are going to make what losses if we set it to the desired contract that we want to go. So you can see here on the top here where the mouse pointer is pointing to, you click there and you see drawings here, indicators, height, drawings, and more. So you go to drawing. When I go to drawing, I'm going to draw some patterns here so as to know that at this point or at this juncture, if I trade with buy, I'll make profit. If I trade with sell or short, I'll make what profit. So here you can see we have these lines here. Let me screw out this small for you to know. Okay, so you can see we have lines here. You have this, as I'm pointing it to you, click on that, then you select trend line. When I select trend line with the color of blue, I can see that okay, at this point, if I draw a line, what's the market saying? The market saying if I draw a line from here and stretch it to this point, as you can see, and I draw another line choosing different color. I draw another line choosing different color. Let's say yellow. Then I drew it to this side. Okay, now you can see I have this diagram. And this diagram, what does that mean? And you can see with the trade pattern, there are lots of diagrams that we need to know. Okay, then I go to my chart board to see if this diagram is going to predict that I'm going to make profit or I'm going to make loss. This is the chart pattern. Okay, with the chart pattern, the diagram that I drew, what does it say? Am I going to make profits? I'm going to make losses. Okay, then you select to know, okay, if you get the bullish continuation, means the next market is going to rise, then you go for rise, or you go for long, or you go for buy. If it says it's going to give you continuation, that fall down continuation, then it means you are going to get what? Loss. Then you know the next thing to do. But here's the case, the diagram that we drew doesn't mean that. So here you just have to make sure that the diagram that you draw determines that you are going to make profit or you are going to make losses. So let's go again and see how it goes. So with the market, I'll go for market. I want to enter into the trade with my leverage, which is 50%. That is, I'm going to incur a cost of $1,400. Then I go for long. When I go for long, to go to the position. Okay, but this time around there's no open orders. Okay, it is only at the position. So with the position, let me explain things here. Once I entered into the market, you can see with the entry price of 25,051 USDT, the mark price is 25,021. So my unrealized profits and losses, $88. Okay, so as it is changing, it keeps changing. Okay, it keeps changing. This keeps changing. Okay, so because of the nature of the chart or the market, that's how it goes. So we have what we call liquidation price here. With this liquidation price, it is the price at which you will be liquidated. When I say liquidated, it means that as I entered into the market when the price was 25,051, if the price reaches 24,902, I'm going to be liquidated. That is all my money that was used in trading, that is the $1,368, is going to lost. I'm going to lose my money when the market hit 24,902. That's the liquidation price. Liquidation price is the price at which you are going to be liquidated. That is price of which when the market hits this price, all your money is going to go. You are going to lose all your money. That is why always it is advisable to take profit and also stop loss. Okay, yeah, so here you can see I'm making profit here. I'm making profit. The profit I'm making it here because I entered into the market when the price was 25,051, but the price is 25,062. It is going up. Okay, so I'm making what? Profit. I am making profit. That is a risk of 40.8%. Okay, a risk of 40.8%. So here, this is how it goes. This is how you can trade on the Binance features with the demo account. So when you get the chance, learn more and also know what it goes, so as to help you get more knowledge and insight when it comes to trading on Binance features. So if I want to stop this whole market, then I go to close position. Okay, so with the close position, I'm going to make profit of $51. Then I confirm. So when I confirm, it is done. You see the position is now 0. Nothing is there. Okay, nothing is there.